Welcome to the next edition of the Guildford Property Conversation, brought to you by the team at Seymour's in Guildford. We want to cut through the headlines and provide advice and practical understanding of the property market as we see it today. And today I am delighted to be joined by Jack Doherty. He's our in-house mortgage broker here at Seymour's in Guildford. And we're going to be talking about everything to do with mortgages and buying and what that landscape looks like, because I think it can be pretty confusing. Yeah. So welcome, Jack.
Hi, Charity.
So the first question I want to ask Jack today is, should buyers wait or should they buy now?
Well, I certainly think the first thing to do in the process is speak to your financial advisor, speak to a mortgage advisor and understand what you can do. I think a lot of people will sit on the fence. They'll wait to make a judgment call when they can have a no obligation conversation, speak to a mortgage advisor and really better understand the position they're in and then plan their future around that. So I'd certainly say if you are on the fence and you're thinking about buying a property, speak to someone now rather than later.
And the conversations that those buyers or prospective buyers are going to be engaging in, what do they look like in the first instance? What do those conversations look like?
Yeah, so what we'll do is we'll sit down, we'll explain sort of the process and what we'll do. I'll talk them through their current situation, ask some questions to really understand what's their position, what's going on and what they're looking to do. And then off the back of that, I'll send them through a few options as to how they could possibly set up a mortgage, what sort of purchase price they'd be looking for at a property, and really set them up to start doing some viewings and looking at properties, whether they choose to do that now or later on in the year. But a lot of the time people say to me, wow, I didn't realise this was possible, that was possible, and actually I think I'm gonna start viewing some properties and really see what I want.
So we often hear in the press, don't we, about rates and mortgages costing more. Interest rates haven't changed for a good few months now, but have mortgage rates changed more recently?
Yes, good question. And mortgage rates have gone up and down really all through this year as they always do. And I think, as I always say to people, mortgage rates do go up and down. That is a part of the market. That is a part of getting a mortgage. But I think the most important thing I would say is to get some numbers, really work out what is affordable to you, work out your budget. Just because you're getting a mortgage rate today doesn't mean that's going to be the same in 2 years' time, 5 years' time, however long that is. So I'd really say it's planning for what you've got now and what's going to come in the future as well.
And if someone said, oh, I'm really nervous, I think that the rates will come down, I'm not going to do it now, what would you say to those who perhaps are sitting on the fence? Do you think it's worthwhile waiting?
The third thing I'd say again is speak to a mortgage advisor, learn what that monthly payment's going to be, because it might actually shock you in a good way or a bad way what that's going to be. But if you're saying, I think rates are going to come down, well, if you expect rates to come down, you also expect house prices to go up. You expect the seller to think, actually, my buyer can afford more because mortgage rates are lower.
Yeah.
So I'd actually say, if you think rates are going to come down in the next year, 2 years, maybe have a look now, see what you can get, make an offer on a property. And then in 2 years' time, if rates have gone down as you suggest, then we can hopefully remortgage you and refinance you onto a lower rate, if that was what was to happen.
So 2026 has been a crazy year, not only domestic politics, but slightly wider, what's going on in the Middle East. Where do you see rates going tail end of 2026, and what do you think the landscape's going to be in next year?
Yeah, it's just a really difficult question to answer, isn't it? Because we just
Jack,
don't know.
where's your crystal ball?
We just don't know where they're going to go. And what I would say to every potential buyer and people that are afraid of what mortgage rates are or are going to happen to them, we're probably seeing rates historically about where they've been. I think we saw really a low period, especially during COVID, that we've never seen before, and rates have really corrected themselves. So I'd say, look, if you're worried about future rate rises, there is more options than has ever been available before. You can fix yourself in for 5 or even 10 years if you wanted to and you really are concerned. Equally, if you wanted flexibility, you could fix in for a shorter amount of time. So going back to your question of where do I think mortgage rates will go, I don't know. I wish I'd give you an answer on that. But we can plan around your appetite for risk and what you think is going to come.
So do you think where we are at the moment is probably the new norm with a little spike and trough around it?
I certainly don't think we're going to unfortunately see rates where they were
No.
5 years ago, but I'm hopeful that they'll go the right way. We'll see.
Okay, good. In your opinion, what is the biggest misconception about a mortgage or getting a mortgage?
Yeah, I think it's probably the fear factor. Everyone comes to me, especially first-time buyers, and they're just absolutely petrified of what's there. They hear big numbers like 40-year terms, which are now available for mortgages, and they think, oh my God, this is serious, this is real. And what I would say is everything is flexible and it's about planning in the right way. A lot of people in a first instance will start viewing properties or they'll go to their bank. And as I say, speak to a mortgage advisor is the best thing to do so you can understand what the different options are, where there's flexibility and what can be done in the future. Because when you're always refinancing, remortgaging, we can always review how things have changed since we last spoke and really tailor what we're doing and your mortgage needs to what you need.
So, with your advisory hat on, Jack, what would you advise buyers who are trying to balance affordability with finding the right home? And that might be the right home because they need to be within catchment to a certain school or close to a station. What advice would you be able to give to those buyers?
I'd say again, speak to a mortgage advisor, find out what you can borrow. I'd say once you've spoken to a mortgage advisor, you've got some options, then really it's getting out looking at properties. I think the biggest thing I do is I speak to people, then I speak to them again a month or two later and they haven't done anything on it. And I say, look, just go out, look at some properties and see what you like, what you don't like. And then really we can go from there. And then if anything comes up during them viewings, after them viewings, we can address them and we can see really what is possible.
So let's just take a bit of a segment. There is an audience out there that have different criteria, and those would be those who are self-employed. I think there's quite a bit in the press about people being self-employed and the inability to get a mortgage or to buy a property. Is that fair? Would that be right to say?
I don't think that'd be right to say.
Okay.
Especially in Guildford, you get a lot of self-employed people, whether they're sole traders or they're directors of a limited company. I certainly think I speak to people, and you said about misconceptions, I think that probably might be the biggest misconception. You certainly see a lot of people, well, I see a lot of people I speak to saying, oh, I'm self-employed, I know it's difficult to get a mortgage. And I say, actually, that isn't necessarily the case. There are often additional document checks. We need to see copies of your company accounts, tax returns, your self-employed documentation, but especially nowadays and is evolving moving forward as well, there's a lot of appetite for self-employed people. I think it's always been historically people need 2 or 3 years books and have been doing it and actively doing it for that period of time. However, that's really changed. I mean, you certainly don't need to have done it for that period of time. After your first tax return, we could start looking at your mortgage options that are available and really plan for what's going to come. And I think where you have self-employed people, more than ever, that they need advice on how is best to tailor this mortgage to your needs and your risk appetite.
So how would a person who is self-employed go about improving their chances of getting the best product out there?
Yeah, I think the first thing to do is and I've said it 100 times already,
Speak to your broker.
to a mortgage advisor, speak to a broker. And the reason for that is lenders treat self-employed people so differently and they view it so differently. To give you an example, some lenders will go off your salary and your dividends that you pay yourself. Some lenders will go off your company's net profits. And a mortgage advisor can tell you which way is better to assess your personal circumstances and your income than other lenders.
So let's just talk now about the prospective buyer. What do you think they should do before they actively go out and start looking at properties from a financial point of view? Yeah. Actually, I know what you're going to say.
I think you're going to know what I'm going to say.
Speak to your broker.
Speak to your broker, yeah, absolutely. I mean, even if you've just had a passing thought and maybe you had a discussion with your partner and you're thinking about moving out, you don't know what property you want, you don't know what area you want, speak to a mortgage advisor, find out what you can afford.
What about these online things where someone could, you put in your salary and they come up with a mortgage? Do you think those are good enough before you embark on going out viewing?
In my opinion, I think they're maybe a little bit misleading.
Okay.
I think for some people, especially if you don't understand how mortgages work and how affordability with lenders work, it can be useful. But a lot of the time what you'll see there is one opinion from one lender as to what they could offer you, whereas on the rest of the market, you may be able to find a lender who could offer you substantially more. I know recently I had someone that could be offered 4.5 times their income via an online calculator, and another lender would offer them 6 times their income. Wow. So actually that difference really did make a substantial difference as to what sort of properties they could look at and were going to view after that conversation.
And do you think people are more concerned, because I mean that's quite a difference, isn't it? 4.5 times your salary, 6 times your salary. Is that person going to be more concerned and inclined to worry about what their monthly payment is? Is that something that...
That was the conversation we had, because after that I think that the monthly payments had increased, but they sat down and had the conversation and said actually, although the monthly payments are slightly more than what we could get with this other lender, it better suited their needs and what they wanted from their life and from their future goals. And they actually decided that for them it was a better idea to look at that route. So.
Wow. There's obviously been some changes in the legal process with Rent Reform Act, etc., etc. And what I've noticed on the ground is that a lot of investors have actually come out of the market and are selling their properties. There is also the other side where people are potentially thinking of becoming investors or going into the buy-to-let mortgage market. Have you got advice for those people? Is that a market that you found constricted? Is it scary? What does that look like today?
Yeah, I've certainly had a lot of conversations on this at the moment, and I think a lot of people are worried, are quite sceptical about where the buy-to-let market is going. And what I would say is I think there is still an appetite in Guildford for buy-to-lets, for rental properties and for landlords. I think I've certainly seen from previous clients and previous cases I've had that there is still good rental yields available in Guildford. I think landlords have just adapted to the market. I think a lot of the time we're now seeing different sorts of properties, and as you'll know, I think HMO is quite a big player here in Guildford, and I only think that's going to get larger from what I'm seeing, and more than ever I'm seeing new landlords come to the market and asking about these type of mortgages than ever before. So I certainly think that there's an appetite for it, and albeit people are worried and are asking questions, I think it's a good conversation to have.
Do you think those people are better off structuring things as part of a limited company when seeking a buy-to-let mortgage?
It's certainly one to ask your tax advisor, which one's better. I would certainly say that I think it's always been seen as, I'd almost say, a dodgy mortgage, a limited company buy-to-let in a lot of people's eyes, but that's not the case at all. And certainly we've seen over the last few years so many more lenders coming into this space, wanting to offer different kind of products and different kind of avenues, and it really is a bigger market than ever. Most of the new purchases in Guildford are buy-to-lets under, or most buy-to-let purchases are under limited companies now. So certainly it is worth exploring that if you are thinking about it.
So let's just say, for example, I am looking to buy an HMO and I've got 20% deposit to put down. I'm setting it up as the first purchase in a limited company. What sort of rates do you think would be available to me for that type of property?
Yeah, it really does depend on a few factors, but there's certainly not a lot higher than regular buy-to-let rates. I've seen rates over the last sort of year fluctuate between, I'd say 3 and 5%. It does depend on the property and the client, but they're certainly not as high as I think people expect and people vision. So.
Yeah, I'm surprised by that actually, because I would have thought it would certainly be in excess of 5%, but 5% if you're getting a yield of 6 or 7 is fair enough, isn't it, in the marketplace today?
Absolutely, and it certainly can work well for clients. So.
Yeah, for sure. So I'm going to throw a couple of words at you.
Okay. Interest
only or capital and interest?
That's a great question, and it does depend on the client and on your own circumstances. A lot of residential mortgages are on a capital and interest basis, as they want that security that knowing by the end of the term they will have cleared that mortgage. I know you mentioned self-employed people, and I've had one instance or a few instances where they actually prefer to do interest only, as they'd rather keep their monthly payments and monthly outgoings low, so they can focus on other priorities with their business and with their dealings. But it really does depend on the client.
Okay, another 2 words for you. 2-year fixed or 5-year fixed?
Again, that's a great question, and it does depend on the client. It comes down to two things. Where do you think rates are going to go? And what are your priorities? Would you rather that flexibility of a 2-year fix, or would you rather the security of a 5-year? And annoyingly, there's not a right answer to that question. So it's completely down to you. But speak to a mortgage advisor, find out the benefits, find out the difference in rates, and make your decision off that.
So my last question was going to be, what's your biggest takeaway from today's conversation? But I think I know what your biggest takeaway is. Can I give it a go?
You can give it a go.
Speak to your broker.
Absolutely, yeah. I think that's the first step in the process, is speaking to a mortgage broker and then get out viewing some properties. There's no obligation having that first conversation. Most mortgage brokers won't charge a fee for it. Really understand what you can afford, what it would mean taking out a mortgage, and I think you'll be surprised at how affordable and the different options that would be available to you.
Perfect. Well, that sums up our conversation today. I'd just like to thank Jack again for coming along. I've certainly got some takeaways from that I will be thinking about and discussing with my potential clients who are embarking on the next move and discussing mortgages. And I'll certainly be recommending them to have a chat with Jack. Thank you for listening, and thank you for coming along, Jack.
Thank you.